Hey, what's up? It's Ben here. So you want to learn how to get the best interest rate on a home loan. Whether you're a first-time home buyer or an investor, you might find a few tips here that could help you save thousands of dollars. Full disclosure here, again, I'm not a loan officer nor a financial advisor. I'm just a random guy on YouTube that invests in real estate on the side. But if you need help, do consult with a professional. So if you stick around to the end, you'll get an idea of how you can put some money into your pocket and getting the best home loan rates. So let me go ahead and tell you the basics on how you should approach this if you haven't already know. That is to shop for lenders. When shopping for loans, you can go into a physical location and find your lenders there, or go online and find an online lender. And if you were to compare local lenders to online lenders will usually give you a lower rate with lower fees, and that's because they don't have a physical location. And that lender is probably somewhere out of state. Because of that, their customer service isn't really top notch. Most likely, you're not going to have your lender's phone and easily call them up. But if you find one with an exceptional service, interest rate, and fees, then you keep that lender for future transactions until you find another lender. I know nowadays we aren't that loyal because we jump around trying to find the best thing that'll benefit us the most, and I get it. Sometimes in the morning, I cheat on my tea with coffee because coffee helps me wake up faster. That's all. Now, when you're doing your shopping, you need to compare your lenders on the same day. If you call your lenders on different days, the market is going to change and everyone could have different rates the next day. You need to do an apple-to-apple comparison here. When you're doing this, you need to ask them, hey lender, what is your interest rate for a conventional loan for owner-occupied single-family house at 20% down? Then they'll give you a rate. Let's say they come back to you and say, oh, it's 4%. Now, the second question you need to ask is that your 0-point rate? If not, what is your 0-point rate? Remember that it needs to be for the same loan product because conventionals are different from FHAs, condos are different from single family house, live-ins are different from investments. And also the amount that you put in can cause your rates to change as well. And by the way, this is all under fixed rate, not variable rates. That's why you need to do an apple-to-apple comparison. Next, you will need to ask for the fee structures because this is what you're going to pay up front for that loan. If you know that you're going to get the loan for the long run and won't be refinancing it out anytime soon, then it's best to stick with the lowest interest rate because usually fees are a couple of $100 off from each lender. And I haven't seen anything that's too crazy like thousands of dollars off from each lender when you're doing an apples to apples comparison. Well, at least in my area. Now, let's say one lender said that my 0-point rate is 4% and this is our fees. And the second one said that it's 4.25% and this is our fees. And the third one said that it's 3.75% and this is our fees. Now, you can line them up and get a pretty good idea of which rate is the best for you. And remember to gather all information on the same day. But wait, there's more. To further help you get the best home loan rates, you'll then need to get pre-approved by that lender and they'll give you a more detailed breakdown of your loan terms, and then you go shop that rate around and see if there's any other lenders out there who can beat those rates you have. You then do it again and again until you hit the lowest or the most desirable one that you want. This will take a lot of your time, but hey, you're going to get the best rates. Now you might be thinking it's going to affect your credit score because they're going to do a hard pull every time you're trying to get pre-approved, but in reality, most credit scores will count your multiple inquiries as just one inquiry if it's made within 30 days. Plus, on my credit score video, you see that multiple inquiries have a low impact on your credit score anyways. So if you really want to get the best rate for your loans, it shouldn't even matter because you're going to save a lot more money in the long run. And 2 years from now, those inquiries will just fade away. So now you're intrigued by all of this and know that if you just put in a few hours of your time, you can save a lot of money. But wait. There's more. Now, if you want to take an extra step to really get that best bang for your buck, then let's talk about discount points. A discount point is the fee that you pay to get a certain interest rate. Remember earlier I said to find out what the 0-point rate will be? Now, that doesn't mean that you pay zero fees. That's just where you start off and pay the normal fees. Some lenders will give you an option to buy points to get a lower interest rate. For example, let's say instead of 4% interest rate, you want a 3.5% interest rate. And the lender could say, oh, that'll cost you 1 point. And buying that 1 point will cost you $4,000 upfront. Now, you decide whether it'll make sense to pay that. Usually that's a better option if you're doing a 30-year fixed loan. Again, I'm not your advisor, so please consult one first. So here's the fun part where you could possibly get something close to a free loan. And by the way, a huge bulk of your closing costs for the loan are prepaid expenses anyways, so that doesn't really matter. Now, let them know that you don't want that 4% interest rate, but instead you want that 4.5% interest rate. Now, you might be thinking, why would someone take a higher interest rate and pay more every month? Let's hold on to that question. The lender might come back to you and say, okay, I'll give you -1 point. So earlier I said that 1 point will cost you $4,000. Now since that you have -1 point, the lender will give you $4,000 for you to take a higher interest rate. And the reason for that is because lenders can resell their loan on the market for a higher price, and that's how they could make their money back and profit from you. Now, going back to the other question of why someone would take a higher interest rate is because there's times when you take negative points, you won't have to pay a lot of the cost for the loan up front when it comes to closing, but you'll have to pay more on your monthly interest over time. Another reason is that you know that you won't be living in that property for a long period of time, and you know that you're going to sell it. Then it might be worth it getting a higher rate with some money back. So that's the reason why. And if you're looking to invest in real estate, this part alone can help you maximize your returns or game the system in home loans. I know that was a lot of information, so let's do a recap. If you don't want to do a lot of work, the first thing you can do is to find an online lender and shop for rates online. If you want that extra level of customer service, shop for rates locally to see which lender offers you the best rates and do an apple-to-apple comparison. Next, get pre-approved. Once you get pre-approved, shop that rate around with other lenders and see if there's anyone out there who can beat those rates. This will take a few hours of your time, but it will maximize your chances of getting your best rates. Now, if you really want to get the best bang for your buck, you'll have to start looking at discount points and whether you want to buy points to get a lower interest rate or get money back for taking a higher interest rate. And this all depends on your situation. And there you have it, folks. That's how to get the best home loan rates. So go out there and start investing now while interest rates are at an all-time low. If you like this video, make sure to like it, share it with your friends and relatives, and don't forget to smash that like button and subscribe for future videos where I talk about real estate, credit cards, finance, and other money-related topics. And I'll catch you all next time. Bye.